Hello from Mounted Markets, this is Ahura, and we'll be with you to have a short review on weekly outlook in the week ahead, which is going to be the week number 20 in 2025. As always, first let's check what we had previous week, and then we can go forward and check what we can see and what we can expect from the week ahead. Previous week was the central banks meetings, where the central bank in United States, as you know, they held the rates at 4.25%, as in line with expectations. We didn't have such a surprise. Mostly the surprise going to be from the central bank's speakers, which is would be this will be in the week ahead. They're gonna have a more they will put more light on what the central bank thinking right now. But generally, what we can see, probably what we are expecting to see in the speakers in the week ahead as well, is that they're gonna talk again. That almost repeat the same thing that Mr. Powell said: more cautious before making any new decisions. This is what we're expecting to see and hear from their speeches. Central bank in United Kingdom, they cut the rates by 25 basis point. While in Brazil, they increased the rates by 25 basis point. After that, inflation increased to more than 5%, much more than central bank's target of 3% in Brazil. Norway, they held the rate, without any rate cut at the same level. But in China, while the central bank, they held the rates for at 3.1% for 1 year and 3.6% for 5 years loan prime rates. They reduced the reserve ratio percent from the reserve ratio rate from 9.5% to 9%, which means that the central bank in China trying to support more and more the ongoing and weakening economy. Generally, the central banks across the globe, they were more cautious about what's going on about the inflation and trade wars. Week ahead after by the way, the trade talks also they give some hopes to the market as after the UK and the United States they came to the point for the trade talks. Actually, they didn't make any specific deal, but they agreed on the framework of the trades that they're going to have. This is going to be an example for other trade talks as well. That gives some hopes to the especially to the stock markets. Week ahead, the focus will be on GDP and inflation numbers across the board. GDP in United States published 2 weeks ago, but from other economies, we're going to have numbers in this week. As you know, in the United States, the first quarter GDP fell by 0.3% as most businesses and people, they started to have pre-buying, so like buying earlier buying before any tariffs affect the prices. Still, we will have the CPI or inflation numbers, which is going to be published on Tuesday for consumers price index or for the consumer inflation. We expect to see after 0.1% fall in the previous months in March and April, we are expecting to see the inflation to increase by 0.3% and core inflation to increase by 0.3% also after 0.1% rise of previous month. Generally, we can say that can be the first effect of we can probably see the first effect of trade wars and the new tariffs on the inflation. And on the annual scale, we expect to see the inflation for the CPI to stay at 2.4% unchanged, but for core CPI, we expect to see slightly to increase to 2.9%. Later in United States on Thursday, we're going to have producer price index, where we expect to see the producer price also to increase by 0.2% after previous month's 0.4% fall. But generally, we expect to see that the producers prices also to increase and confirm that this inflation could be a little bit more sticky in next months. The retail sales also going to be published. We expect to see slightly lower retail sales after 1.5% jump. Actually, we can say in March, 0.1% increase in retail sales is expected to be seen. Retail sales excluding the autos is expected to increase by 0.3%. On Friday also we will have the housing market data, where we expect to see the building permits to slightly slower to 1.45 million, and the housing starts slightly to increase from 1.32 million to 1.33 6 million. That's generally what we expect to see from from United States economy. Generally, the most data we expect are slightly to confirm that economy slightly slowing, and we will have more weakening signal from the U.S. economy. Out of the United States, in Japan, if you start from Friday this way. In Japan, we're going to have the gross domestic numbers or GDP numbers. We expect to see, same as United States, we expect to see the Japanese economy slightly falling by 0.2 or between 0.2 and 0.3% in the first quarter, which means that the Japanese economy is going to slightly fall, but it's not going to increase the concerns. Generally, the numbers in Japan are fine, and we expect to see that wouldn't affect the central bank's policies in Japan. In Europe, we expect to see the CPI or inflation numbers from most European countries, including Italy, French, and Swiss, and many other economies, including, I mean, the countries, the European countries include inside, I mean, by the Eurozone or out of the Eurozone generally in Europe. But generally, the inflation numbers are expected to be published in the next week in Europe, and we expect to see that European inflation slightly slowing, and they're going to have a more signal from most economies across the Europe, and most slowing inflation signals from most, I mean, to see that more slowing inflation signals from most European economies. Sorry for confusing. Also, the other thing that we can expect from we are expecting to see other number is the GDP numbers from Europe, where the GDP were in Eurozone generally expected to increase by 0.4% in the first quarter, which means in annually we expect to see the 1.2% GDP. Generally, we expect that means that the GDP or economy slightly started to increase after several quarters negative or slight improve in a Eurozone. These numbers generally would support slightly the euro against its crosses. We expect to see the GDP numbers from the United Kingdom as well, where the quarter in the first quarter we expect to see the GDP to increase by 0.6%, slightly much better than 0.1% seen in the fourth quarter 2024. While on the monthly scale in March we expect to see GDP to increase by 0.1% after 0.5% increase in March. In February, the industrial production and manufacturing production on the other side, both of them expected to fell by 0.8 and 0.6%, increasing the worries or warning signals, while the employment data, which is going also to be published on Tuesday from United Kingdom, also can increase the same, can give the same signal and tell us that the inflation, the labor market is weakening in United Kingdom. Also, we expect to see unemployment to increase to 4.5% from 4.4% in February, the 3 months the inflation, the 3 months unemployment rate. Generally, the labor market going to give more weakening signal, while the average earnings also, including bonuses, expected to increase by 5.2%, lower than 5.6% in February. Generally, the labor market means that can give us more weakening signal. That's the most important data we expect to see from United States, United Kingdom, Europe, and Japan. Generally, the data, but generally the data are very kind of the mix from most economies. But generally, what we can expect to see is that the Europe and UK gonna have the better numbers. United Kingdom and Japan gonna have the weaker numbers, the same, just like in a very short numbers. However, the week ahead is going to be the central bank speakers as well. We will have too many speakers from United Kingdom, European Central Bank, and United States and Federal Reserve. They're going to give us more updates and data and information what central banks and policymakers are going to thinking about the economic growth, inflation, and also the effects of trade war. On the trade war or trade talks front, also the eyes will be focusing. I mean, the eyes will be focusing on U.S. and Chinese trade talks, because which started on the Saturday, May 10. We expect to see. We are waiting to see the more results and see what they are thinking about this trade talks and why did they become to the some specific time frame or framework and whatever that they can talk about. Generally, this meeting is not about to deal about the details. They are trying to find a more general framework than talking about the details. Checking the charts, we can see that, as you can see here, the US dollar closed the week for the third consecutive week higher than opening, and generally the uptrend and correction, we can probably say that it's ended here right now. After that, after reaching 100.50, now we expect to see slightly correction in the US dollar chart, and then the side movement between 98 and 100 in a short term, specifically in the VK8. That's the area that we're expecting to see the US dollar 198 and 100. This area side movement for the US dollar index has. We are not too much confidence about the more signal from progress in the inflation or economic growth, and even thought in trade talks or trade deals. However, if we have a more positive signal from trade deal, that can put the negative signal on negative effect on the US dollar index, also on the gold price. Gold price is slightly lowered after talks between the UK and United States and a signal of the US and Chinese trade talks. But generally, with the higher inflation risk, higher unemployment risk, and lower economic growth risk, still the gold still in a buy position in a mid and long term. We expect to see 3,600 and 700 later this year, and around $4,000 area in next year in 2026 generally. But however, we can say that we are still positive about the gold. Even thought in a short term, we can see some correction towards 3,250, but generally we are still positive. On the energy front, oil price increased on hopes of better ongoing trade talks, but generally, as mentioned, we are not so much confident about the possible the result of this trade talk, but still even some positive signal can support the oil price. But as you know, the production also increasing. OPEC Plus increase its production expectations, which means that the production and demand and supply and demand can get some balance in next months, which means that that cannot support these data cannot support the oil price, and we expect to see the price to slower again under $60. However, if the price can hold the $61 area, the next target can be around $64. On the stock market, earnings had ended already. Almost the most important earnings, they are already published. They were not such a good result that we were expecting. The market generally had some warnings about the expectations, the biggest companies' expectations for the continuing or for the rest of this year, which means that we don't have too much confidence on the company's earnings in the next quarters, in the second quarter. However, the market got the positive signal from the trade talks and got a little bit better previous weeks, and we had achieved 4 weeks of consecutive weeks of actually 1 to 3 weeks. After 3 consecutive weeks of increasing, we expect to see some saturation and some conflict in these areas. If the S&P 500 cannot hold $5,700, we can say that the next target going to be slightly lower, around 5,500, which is going to be side movement with the downside tendency. That's something that we expect to see in the Nasdaq and Dow Jones chart as well. On the cryptocurrency market, this trade talk, they give us some more confidence on the traders, which support the prices. We had more data and on-chain data also confirmed about the more buy in the cryptocurrency market, especially in the Bitcoin and Ethereum, which supported the Bitcoin price. And now that's what we can see here, the price about $100,000, so touching even 104,000. Now the next target could be around 1,400, 104,000, sorry. The numbers, because 104,000, above 104,000 we touched the previous week. For the week ahead, 105,000 can be the next target if Bitcoin can hold itself above $100,000, especially 101,000 is the main right now. It's a very important support level. If the price can stay more confidently and more stable around above 101,000, the next target can be around 105,000 and then 110, which is very less likely right now. We expect to see more swing prices around this area between 194 and 104,000. That's generally what happened previous week and what we expect from the week ahead. If you have any other question, don't forget to write in the comment section. I'll try to get back to you as soon as I can. Have a good time. Bye-bye.